Ladies and gentlemen, welcome to a very special Big Tech Frenzy. In today's video, we are going to be talking about Anthony Noto and his appearance on the Goldman Sachs Communicopia and Technology Conference. This is happening live in 4 minutes. Okay? This is going to be very, very exciting. Hopefully, we get to hear about capital market activity, how busy they've been with other companies. Maybe they're going to announce something about new products that should be announced. I'm talking crypto, level 1 options, maybe some talk about even small to mid-sized businesses would be an additional bonus, something that we haven't heard in a little while, okay? It's Anthony Noto's time to shine. He hasn't spoken in a while since his stock has ran quite a lot, okay? There's only been a few tweets here and there ever since their latest quarter, along with their dilution, for which he had just like 1 or 2 tweets about. So this will be the first time that we actually hear his voice, hear what's going on, and get to hear any bullish news. So let's make sure it's up and running. Uh, the idea of having this stuff up at the same time probably can't happen. However, I'm going to update you guys in live time through the chat and putting those chat messages up on screen. Okay. SoFi stock as of today and in the after hours continues to rise. The stock now sitting at $26 flat going into this call. Okay. It's a good day to be a SoFi shareholder, or at least an exciting one. That's for sure. Okay. Let's see what you guys are hoping for. AI would be a big one. AI for sure. Blockchain, crypto. Yep. What else are you guys thinking we're going to hear about? Glad I am subscribed. Thought this was next week for some reason. Snuck up on me quick. Yeah, I mean, time has been flying lately. We have a lot to talk about even after this. So after this happens, there's more news that I want to talk about today and over the weekend. Obviously, many people have heard that Robinhood got into the S&P 500. So we have a lot to cover. Okay. Even more news on SoFi even after this. Okay. New reports, new rankings. It's been a busy weekend. However, technology-wise, it's not been good for me, so I don't want to get into all that. Ladies and gentlemen, I think we're starting here. They're switching the whole... I think we're about to jump in. Here, let me share my screen. You guys hear anything? Nothing yet. It still is early. We still have a minute or so. I'll refresh it if by 6:45 we hear nothing. But usually it just clicks on at some point, and you can even click on mid-conversation. Have I mentioned Nebius? We'll talk about that after this call. But that's very, very exciting as well. Just simply bullish on the semiconductors and AI in general, for which that's been my largest theme by far. But I do not personally hold Nebius. Okay, it's still not 6:45. I'm going to refresh it just to be safe. And okay, it's officially time. Let's see. There will be Nebius talk today. Also, while we wait for this, did Josh Allen, the first day that he was in or sponsored by SoFi, I heard that he did very well. A lot of people are saying this. As you guys know, I have no clue. When is the Fireside Chat? It should be right now. I'm going to refresh. But these things have been known to glitch from time to time. And I'll refresh the whole page really quick. All right, let's see. I hope it's not one of these presentations like what Chris LaPointe did last time, where they're just going through the quarter. They have all the quarterly slides up here. That would be quite boring. Should be any second here, guys. Huge comeback win last night. Okay. Did that just change too? No. Okay. Got audio? Did I hear something there?
All right. We are going to kick off. Next up, we have Sofi CEO Anthony Noto. Anthony, thank you for joining us today. It's nice to be here with a fellow Goldman alum and CEO of what has been a very disruptive fintech in the market. So thank you for joining us.
Thank you for having me.
All right, let's kick it off. I mean, you have had a very impressive first half of the year. You've significantly increased originations through your loan platform business. You've also been beginning to reintroduce your crypto platform. You've rolled out some stablecoin-based product initiatives around remittances, and the core personal loan product in the lending segment is also growing very well. You completed a very significant capital raise in recent months. As you look out at the business, like, what are your main strategic priorities from here over the next 12 to 18 months?
Sure. We're executing the same strategy that we laid out when I joined the company almost 8 years ago in 2018. Same mission, same strategy, to be a one-stop shop for all your financial services needs. We want to help people reach the point that they have enough money to do what they want. That could be the career they want, the size family they want, where they live when they retire, et cetera. In order to get to that point, we have to help them with all their financial decisions, all the big decisions and all the days in between. So we talk about internally, and have been for the last 8 years, about helping people spend better, save better, invest better, and protect better. And we use those verbs purposely because the traditional constructs of financial services products aren't what we're solving for. We're solving for helping people spend less than they make, invest the rest. And so we have to be there for all the days that they're spending money and all the big decisions that they make. I couldn't be prouder of the fact that for the last 16 quarters, we've delivered durable growth through 2 drivers: innovation and brand building. We have to be a trusted household brand name, and we have a world-class team at helping us build that. But we also have to help people save less than they make and invest the rest. And for the last 16 quarters, we've been able to deliver greater than a rule of 40 for each individual quarter. And if you look at each year since 2023, we've actually had over a rule of 40 of over 50. And so there's a couple of ways of driving it. First and foremost is we want to drive member growth of at least 30% and product growth of at least 30%. The monetization follows from there. In terms of specific areas of investment, we've announced a couple that we're really excited about. The first is Sofi Pay. The ability to use a product to pay anybody, anywhere in the world is our long-term goal. It'll start off with being able to send US dollars to foreign countries through Bitcoin network and then into fiat on the back end. Over time, we'll add to that SoFi stablecoin that will be part of Sofi Pay and many other parts of our business. In addition to that, we're rebuilding, as you mentioned, buy, sell, and hold in cryptocurrency, and we're super excited about bringing that back to our members, which we had to get out of a couple of years ago. We did a survey. 50% of our members would invest in cryptocurrencies if we offered them. More importantly, more than 60% of the people that we surveyed that were also non-members want to do it with a licensed national bank, which of course we have. AI is another big area of investment, and that's already showing us really good cost savings on the operational side, but also the second order effects of the rate of growth that we have: account takeovers, AML resolution, dispute resolution, and fraud capabilities. So AI is not just about driving growth and helping our members get their money right through things like Cash Coach, but also reducing our costs so we can reinvest in better prices, better interest rates for our members. In addition to that, we launched SoFi Plus in January of 2025, and it's proven to be what we were really hoping for: a product that helps our members do more with us. And so it's a subscription product where we're giving them premium services, and 90% of our new SoFi Plus members are existing members, and 75% of them are taking out another product after they open SoFi Plus. So last night, we launched a new campaign with Josh Allen. Josh is the quarterback for the Buffalo Bills. He was the most valuable player in the National Football League last year. he helped us launch the campaign that SoFi Plus is the most valuable financial subscription product that you could have. So lots of areas of investment as it relates to the consumer side. We're also investing meaningfully in the tech platform side to drive that business and drive new adoption from new partners.
Got it. That makes sense. Maybe we'll just get the obligatory macro question out of the way. There's been a lot of focus on the health of the consumer, some of the recent job postings. Interest rates have come down. General market expectation is a rate cut this month. How are you thinking about the health of the consumer based on what you have seen year to date, and how do you think about the outlook?
We're seeing really strong, consistent demand that's helped us drive the growth that we've been achieving. Last quarter, we had 44% revenue growth, 29% margins, really strong. Our outlook was very positive, and we've seen those trends continue in terms of the demand from the consumer. Credit's also performing well, and so we've seen no change there. Within the SoFi Money business, spending trends have been very positive, and we've seen really good activity on assets under management as it relates to our invest business. So I've seen no changes coming out of our guidance before and feel confident in the outlook we have. It's probably the most optimistic I've been in my 8 years at the company in terms of the growth of our current businesses and what they can produce, and then layer on top of that the initiatives that I mentioned that would be incremental over the next couple of years.
Yeah, that makes sense. You mentioned a lot of the work that you've done on the brand side. You've invested a lot on the brand over time. It's more of a household name than some of the more niche players in the industry that are focused just more on pure play lending. Where do you hope to position SoFi in the consumer's mind relative to some of the incumbent banking providers out there?
Sure. We want to build a lifetime relationship with our members. We call them members for a reason. We want to offer them all the products they need to get their money right and solve for that equation of spending less than they make and investing the rest. So we have to have all those products. And we're the only company that I am aware of digitally that offers 4 different types of loans: and home equity loans, student loan refinancing, unsecured personal loans, offers and invest products. Even some of the larger competitors in the invest business are not offering single stocks without commissions, fractional shares, which we pioneered, SoFi ETFs, uniquely built for our investor base for diversified investing, dollar cost averaging, robo accounts for those people that want to invest and have to think about how they're allocating their capital, IPOs, alternative assets, and even private offerings. And we'll continue to add to that equation as well. So we're going after people with household income of $100,000 or more, people that have done well academically, have done well successfully, and they're not getting all the products and services from the big banks. One example I like to point out is our unsecured personal loan. It's starting to get a lot more attention from the investment community. It's been a great product for us. Why does that product exist? Well, my theory is that the reason why that product's not offered to people with 100,000 household income or higher, as opposed to just the high net wealth individuals, is banks would much rather have that person using their credit card and running up a revolving balance that pays a 25% interest rate. It's a complete crime to be offering that product to that person. And so our personal loan is uniquely benefiting from the banking industry, really taking advantage of their members. Try to get a home loan from your bank. You name the big bank, top 5 banks in the country. Again, got to be a high net wealth individual to get access to that product. Otherwise, you're going to a mortgage lender only. We offer mortgages, not because we can make a lot of money, because it's an important economic decision that people will make. It's probably the largest economic decision they'll make and the greatest emotional decision they'll make. We have to be there for all of those needs, and we don't want to be in a position where we can't offer a product that someone needs, so they go to somebody else.
Yeah. And so, the company got its start with a lot more of these more lending-oriented relationships. The concentration in lending has come down over time. As you think about deepening relationships over time, how do you measure the growth in, what I'll kind of broadly call primary customer relationships? How do you measure it? What do you think are the products that can get SoFi top of mind kind of more frequently than the occasional loan product?
Yeah, over the last 2 years, our SoFi Money account has been a great driver of primary relationships. I think we offer one of the best accounts, the best of checking and savings in one. SoFi Money, you can get 3.8% interest if you do direct deposit with us, no fees, 2-day early paycheck, free certified financial planner at your whenever you need to set up an appointment for them. You set it up in the app. They call you right when you have that appointment. In addition to that, you can pay any way that you want. I think we're the only product where you can pay via Zelle because we're a bank. You can pay via phone number. You can pay via an email address, and you can also pay with self-serve wires. And we'll continue to add to that, including a stable coin by SoFi. And so we think we complete out that entire value proposition relative to other people. 90% of our deposits from direct deposit customers because we build that account to serve all their needs, you need to do that in order to become a primary relationship. We'll offer a product sometime in the future that actually is even better than SoFi Money. That's another version of that adds even more value on top of what we're already doing with SoFi Money. So we're excited about that product. SoFi really has also proven to be a really good product in that people can connect all their accounts to one place at SoFi, all their credit cards, even if they're not SoFi credit cards, all their bank accounts, all their investment accounts, and they can see in one place everything they're spending, all of their income coming in, how their investments are doing. And that enablement allows us to build something like Cash Coach that looks across your entire financial picture, tells you how much cash you have everywhere, and then gives you options on where you can allocate that cash. Sometimes it's paying off a credit card that has a revolving balance. Sometimes it's putting into an interest rate product like our SoFi savings account, or investing in something like our robo accounts.
Yeah, no, that makes sense. On the loan platform side, a new business over the last year or so, and you've invested a lot to get it to where it is. You've been growing really significantly over the last couple of quarters. I guess, can you talk a little bit about the customer experience when they go through this channel versus a regular SoFi customer, and maybe talk a little bit about how this platform kind of broadens out the addressable market of consumers?
Sure. For those that are not familiar, the loan platform business is when we build a relationship with someone that wants us to produce loans for them within a certain credit criteria. We get paid a fee for our origination platform, our marketing platform, our servicing platform, et cetera, all of which we built for our own business. At first, that business was really about volume in our credit box that was above and beyond what we would like to do from a risk perspective, so it allowed us to serve more members. We do the servicing, they're a SoFi member, but that loan is somebody else's, and we simply get paid a fee for that. This most recent quarter, for the first time, we started doing some loans outside our credit box. Now, those are loans that we wouldn't have otherwise underwritten, that they've contractually taken at the point of origination. We get paid a fee for that. So it's capital light, low risk, but it helps us reach more members and satisfy their needs, and then build a relationship with them with other products and services. I think we're just scratching the surface in the opportunity. What we found is the more money that we spent to build awareness of the personal loan product, the more demand we would get. And at some point, that demand was more than we would want to put on our balance sheet itself. And so this other business allowed us to continue to tap into that demand. I really think we've hit a sort of new vein of growth in that we're finding people that do have credit card debt beyond 30 days. They may be carrying it for 45 days or for 4 months or till they get their next bonus. Well, it's nuts that they're paying 25% interest on that balance. With us, they can refinance at 12 or 13%. They could term it out as long as they want. There's no prepayment penalties. If rates go down, they could refinance. If they want to pay it off in 2 months, even though it's 2 years, they could do that as well. It's a great product. And so having these loan platform buyers allows us to keep building into that marketplace. I think we've just, scratched the surface on what we can do. That's within our credit box. Outside our credit box, we decline more than $100 billion of loan applicants a year. And so now we're turning some of that into revenue and new relationships.
And maybe you can talk about that a little bit, just the opportunity to expand the SoFi customer base to borrowers that didn't historically meet the credit box on the way in the front door. What is your ability to market? Is the product set, tailor-made for that type of consumer?
One of the things we did back in 2018 when I joined was one of our top priorities was to improve the quality of our loans. And I think we've built a world-class underwriting engine and technology capability, but along with that is also world-class marketing capabilities. It is really hard to find people that don't necessarily need money, but you could lower their cost of debt. So someone that may have $15,000 of credit card debt that they know they can pay off whenever they want to, but for whatever reason, they're keeping a revolving balance until the next thing happens. Well, that person's really hard to find because they're actually looking to refinance their debt. They can make the payments they need to make until they pay it off. So you have to find the right marketing channels. It's actually counterintuitive. The channels that have the highest customer acquisition cost are actually the best performing loans. And if you have the lowest customer acquisition costs are the worst performing loans. And so we've developed that marketing expertise to find the right people with the right profile. And so they've been coming all along, but we've declined them. Now we're able to actually satisfy some of their needs and gives us better efficiency on our marketing dollars, and we get paid for it.
Yeah, no, I mean, and that seems like a big opportunity to move into. I mean, it is a less competitive part of the market. It's a place where a lot of the incumbent banks don't focus. How do you think about the monetization opportunity in the loan platform business, kind of vis-a-vis the normal credit box? It sounds like it would be more revenue rich and more customer rich?
Yeah, it's capital light, it's high revenue, it allows us to reinvest in the business. And then for that member, we want them to sign up for a certified financial planner. We want them to switch to SoFi Money account, to switch to a SoFi Invest account. If we can help them improve their credit score, lower their cost of debt, spend less than they make and getting them investing sooner, they'll get to their goals faster. You can't save your way to your financial goals. You have to invest. It's just not that possible to scale your savings just by getting 3 or 4% interest.
And I guess what are you watching from the customers that come in through that channel for kind of ancillary product adoption?
Just like with the rest of our business, we want to answer 3 questions for them every day by using technology. Having things like Relay and having multiple products gives us intel to what they're doing with their money. So we want to use AI and other technologies to answer 3 questions for them proactively a day. What must you do in your financial life this day? What could you do and what should you do? And those 3 questions you can answer once you have a primary relationship with them.
Yeah, makes sense. I wanted to hit on the capital raise over the last month. You did a capital raise right after earnings. Could you talk about just why you raised capital? I think the guidance around balance sheet strategy has been for single-digit growth in the balance sheet. So, how do you view this capital? Is there any change in the balance sheet strategy? Is it for M&A? Is it opportunistic? Just how do you think about uses of proceeds?
Yeah, it was a completely opportunistic decision. We have some debt that's high cost that we could refinance. In addition to that, there's some small M&A that we could do. 2 areas we're investing aggressively in are cryptocurrency and blockchain, as well as AI. For the first time in the 8 years that I've been at SoFi, the venture capital community, the growth equity community is actually investing in second order effects of the growth of our business and fintech generally. If we scale deposits to almost $30 billion the way we have over the last 8 years, scale our member base to close to 12 million members at the end of last quarter and driving a significant amount of spending, you also drive up fraud, you drive up account takeovers, you drive up disputes. And so what technologies can be deployed to bring those costs down? Well, there's a ton of AI companies that are being built just for those second order effects. Before, we were the only ones investing in those. Now the entire investment community is doing that, and it gives us great opportunity to maybe buy 1 or 2 of these small companies, put them into our tech platform business, and then bring that to the masses in terms of all the other fintech companies and financial institutions. So this capital could allow us to do that as well. And having more capital for changing decisions down the road is also valuable. In terms of the balance sheet, no changes in our balance sheet strategy whatsoever.
Got it. It's very clear. I was hoping you could talk about just the funding environment in general. The growth of loan platform is in part kind of helped by the growth of the private credit industry, the amount of interest that there has been in kind of deploying capital into consumer assets. So I was wondering if you could talk a little bit about SoFi's access to funding in the loan platform business. How do you think about the sustainability of the funding, and how do you think about where we are in kind of the overall funding cycle?
Yeah, the first thing I'd say is we want to build durable revenue streams. We don't want flashes in the pan. We're picking partners that we know are able to sustain their asset management business, that have the capital to continue to invest in this over time. And similarly, it took us this long to get to the point where they could count on us delivering a great credit product time and time again. We've been doing it for 8 years. We've gone through 2 interest rate cycles. We've gone through a recession. We've gone through COVID. Our credit is well proven, and our underwriting capabilities are well proven. So that was an important step to get to. But also the scale that we can produce really matters. Being able to produce $2 billion for a partner a year, $5 billion for another partner, that really matters. So our partners we're making sure they're durable partners, that they have a sustained business over many decades, and it'll continue into the future. It's been a great relationship, and we've had people renew their deals, and it remains really positive.
Yeah, very good. You've mentioned crypto several times throughout this presentation. So I wanted to pivot to some of the new products that you have outside of lending. SoFi had to step away from the crypto space for regulatory reasons several years ago. You're reintroducing it now. Where are you in that journey today? You mentioned M&A could be an accelerant to that process. So how are you evaluating what needs to get done kind of internally and externally for that product to go live?
So for the last 16 quarters and the last 4 years, we've been able to deliver consistent Rule of 40 or higher in the low 50s to 60. This year will be 60 in addition to 2023, that was 62, and the mid-50s between those. That's before we've even gotten to considering the growth opportunity of crypto or AI. To me, they were both technology super cycles that we uniquely benefit from. Most companies, most sectors aren't benefiting from both of those super cycles the way that we are. Within crypto, there's a number of things that we'll do, but I would say broadly, we're approaching it that it affects every part of our business. Payment capabilities, lending capabilities, investing capabilities, tech platform capabilities. So the first thing that we'll launch before the end of the year is buy, sell, or hold in crypto, which we used to have. In addition to that, we're working really hard on a stablecoin strategy. And it's actually complementary to the buy, sell, and hold strategy, as well as our payments and our tech platform business. As we build out buy, sell, and hold crypto, we're interacting with marketplaces, with custody and clearing firms, settlement firms, et cetera. Those crypto-centric companies, they don't deal in fiat. They are going to, and we are going to transmit economic value between us via SoFi stablecoin. At first, we may use another stablecoin, but when we launch SoFi stablecoin, that will be the means of economic value transfer, which is faster, cheaper, and more secure than the systems they have today in the traditional investing world. In addition to that, we think SoFi stablecoin will play a role in SoFi Pay. So we announced the ability to send fiat dollars through the Bitcoin network into fiat dollars internationally. SoFi stablecoin will provide that ability as well. SoFi stablecoin will also be an ability to use SoFi Pay to pay at retail and to motivate merchants to accept SoFi stablecoin because they don't have to pay interchange. And we may even be able to give them an economic incentive to accept SoFi stablecoin. Why? We have a bank. When we bring in and we develop SoFi stablecoin and we have a dollar for dollar back stablecoin, we could deposit that in our Fed banking account, earn 4% interest that we can give away to all the participants to take our product versus someone else. Similarly, SoFi stablecoin will be used when we start tokenizing loans as the means of transferring payment. In addition to that, bring it to our tech platform partners where we have over 100 million accounts and convincing them to use that as a lower cost, faster, and safer way to transmit payments.
And I guess outside of the kind of the crypto ecosystems and the partners that you'll be working with, how do you think about driving adoption and kind of bringing some of these crypto solutions to, other players in the ecosystem that are not as crypto forward as SoFi?
So one of the areas that has become more evident to us as an opportunity ties into our tech platform and having a bank. So we have a small, medium business today where we do lead generation for providers of SMB services like checking accounts, savings accounts, and loans. A member comes, SoFi consumer member comes, applies for a loan, applies for a checking account. We give that qualified lead to a partner. We think there's an opportunity in what I would call corporate banking or business banking, going to the large e-commerce companies, the large online retailers, and offering them fiat and crypto banking services. Today, no one's offering at one bank fiat and crypto banking services. And SoFi will endeavor to do that. It'll take us a while to build it out, but there's a large unmet need from big consumer companies that are going to have to operate in both of these worlds. In addition to that, there are crypto-centric companies that are in great need of having banking services for their companies. Private companies like Paxos and Bitco and Talos, and you name all the other companies, some of which have recently gone public. We want to offer them banking services in both fiat and crypto. They don't want to operate in fiat solely, and clearly operating just in crypto is not realistic. And so that's another area that we'll be able to tap into. I also left out providing lending in a secured way backed by crypto assets.
Yeah, that makes a lot of sense. You also mentioned tokenizing loans. Can you talk about some of the financial services plumbing? What is the problem that you're trying to solve? I think people have a good sense for the costs, the natural costs that you're trying to avoid in payments, in a payments context, but could you help articulate the benefit of tokenizing real world assets and financial assets like you're talking about?
Sure. We want to use our technology platform to tokenize any asset, but the first asset that they should tokenize are our loans. Why is that the case? Our loans provide a great ROA. I wish I could buy them myself. Obviously, there's a conflict of interest. I can't. But if I was a retail investor, I still couldn't buy the SoFi loans. It's not at denominations that I could buy. There's a qualified investor profile, et cetera, et cetera. So how do we take those loans and make them available in other loans at $1 at a time or $2 at a time? We've seen the impact of tokenization of other assets, as in the case of Bitcoin and cryptocurrency. So this is a longer term vision over time to be able to offer these assets that have not been accessible to retail investors, just like we're offering IPOs and alternative asset classes like private equity and private credit and private real estate and venture capital. So that's why we would tokenize the loans, in addition to making a more liquid market for other buyers of our loans that are institutional investors.
Yeah, makes sense. just on the traditional investing side, you have highlighted already how advanced the platform is in terms of offering kind of alternative asset classes to retail investors. One of the hardest asset classes to get access to for most retail investors. What are the key initiatives in the traditional in the SoFi Invest platform today that you are most focused on, and how do you think about kind of driving the brokerage platform to be higher top of mind for consumers and customers of SoFi?
Yeah, we are attracting a very different investor than some of the competitive set in the fintech world. We're making investors, we're creating investors by helping them balance their budgets. They spend less than they make and invest the rest, and that's a very unique proposition. If you don't start investing until your 30s or 40s, there's no way you're going to make up for a lost 10 years of compounding from investing in your 20s. So getting them to invest $1 or $2 at a time makes a difference, and they get up the learning curve pretty quickly. One of the products that we haven't had in SoFi Invest that we've been working on and that we'll have by the end of the year is level 1 options. Now you may say, why do you not have level 1 options? Well, we haven't had it because our investors it wasn't a product that was great for them. Well, 8 years later, they really want that product, and it's one that we've been building and we'll be able to bring to them. But we're not going to spend a lot of time on those, what I would say, more corner cases of investing assets and investing capability. We're going to stick to more the mainstream asset classes along the way. Today, we do provide certified financial planners that can help them with their investing, and we could specialize that even further over time. The biggest opportunity we have for SoFi Invest is just awareness, making people aware that we're offering IPOs. We have 3 this week. We had 2 last week, making people aware that we have alternative asset classes that they typically haven't had access to, but then now they do through interval funds. We offer KKR and Franklin Templeton and ARK Investments and a number of others that we just announced. And so that education process, when you have as many products as we have, getting these things to the forefront are hard to do, and using technology is a way to get there.
On the robo product, I mean, what kind of competitive advantage is having all these alternative asset classes? I mean, I've used them. I don't think there's much of an alternative allocation in those products. It seems like a competitive advantage versus almost every other retail robo advisor.
Yeah, so our robo-advisor products are more driven by style of investing, aggressive, moderate, and conservative, as opposed to a specific asset class per se. Then we execute that strategy for them, as an automated process. The alternative asset classes, you can find them in our app. These are products that were typically only available to high net wealth individuals, just like IPOs, but offering IPOs at IPO prices is unique, and getting access to some of these world-class alternative investors is really differentiated, and it helps bring investors to the table and see what else we have, and they realize, oh, they're a one-stop shop just for investing. I don't need to have 4 different investing accounts. I could do it all with SoFi. The big hole up till now is cryptocurrency, which hopefully we'll solve by the end of the year.
Makes sense.
I shouldn't say hopefully. We will have by the end of the year.
Well, maybe from there we can talk about other product initiatives within the organization. Beyond crypto, stable coins, and remittances, what other products could we see SoFi launch over time?
You could see us be more aggressive on the offensive side of AI. Today, we just finished a POC on account takeover where we saw in the POC, it may not translate to the full deployment, a 60% improvement in account takeover resolution. We're right now testing with dispute resolution. AML, BSA is another area that's an opportunity. We've also launched with Sierra as a partner in our chat app on SoFi Money, solving problems with AI, which has shown really strong improvement in containment rates as opposed to abandonment rates. That's all on the cost side, but it also builds trust, and it builds confidence in people and their ability to solve problems in real time. I mentioned before we want to answer 3 questions for you every day: must, should, and could do. And Cash Coach is one example of that. But you can imagine us launching an expense R that looks at all your expenses and does benchmarking versus others your age, your income, your demographic, and making suggestions for you of how you get your expenses down. But in addition to that, we think there's a real opportunity to change the nature of how we deliver content to you. Today, the content in the app, in most financial services company apps, is all in words. There's no videos, there's no tutorials, there's no interaction. AI can help us translate these suggestions, these opportunities to you in a video format as if you're walking into a branch. And so I think there's a huge opportunity to create that level of interaction at the next stage to give people confidence in making these decisions.
No, that makes sense. Just switching gears to the tech platform business, kind of dovetails nicely. You've been talking about the constructive conversations you're having for the platform. You've got a pipeline of clients going live in 2026. What's sort of the latest on the outlook for that business?
Yeah, no change. The opportunity set's still large. Knocking it down and getting the deals done is still the work to be done. I think crypto activity is a new opportunity, and AI is also a new opportunity. Some of that will be organic, some of that will be M&A. But the deals that we announced for next year in January were important wins for us, and we just recently launched one of those, and we have work to do on those. So, that business has been, I think, through a couple of cycles. The winter of higher interest rates really caused banks and financial institutions to pull back from technology spending. You now have crypto investments that people are making and AI investments. Those are new opportunities. And so we're continuing to build strong relationships and be there for when they're making decisions. But the most important element in that business is getting the third parties or counterparties or partners to make decisions on the investments they're going to make. And we need to see that come back in addition to building the new products in crypto and AI that I mentioned.
So maybe to tie together the AI theme with the tech platform, we've talked a lot about agentic commerce in the industry. I know it's early days. It's hard to know where exactly things are headed, but you can imagine more demand for something like the tech platform from AI companies and people who want to drive, card issuance for agentic commerce purposes. What are the conversations like in your industry that you're having, and how do you think about that as an opportunity for SoFi?
I think those are conversations that are on the come for large financial institutions. I think they're more relevant for companies that have embedded finance that don't have the expertise. And there's different segments of the market. You have government, you have B2B, you have consumer embedded finance, and you have big financial institutions. I think these conversations are actually more relevant for mid-market and small market banks and credit unions that can't afford to invest in crypto, that can't afford to invest in AI, and the other non-financial companies that are not even in this business.
Yeah, makes sense. I want to hit on the regulatory environment. One of the major themes of this new administration has been a deregulatory focus across numerous industries, including financial services. Could you just talk about kind of before and after how things have changed in your day-to-day from a regulatory perspective?
I think the environment obviously has changed. There's more decisiveness. There's clearer paths to getting to where you want to go. One of the things I think that's underappreciated by the market, most likely because we haven't said much about it, is we actually ended up with having the best possible license to operate in all these new areas. So when we first got our OCC banking license and got a bank holding company license from the Fed, it was not allowable to have cryptocurrency inside a bank. Couldn't operate with stable coins, Bitcoin, buy, sell, and hold, et cetera. It was viewed as potentially being permissible outside of the bank in the bank holding company. But even that got turned down, as we saw, and we had to exit that business. Today, you can actually do buy, sell, and hold and stable coins inside a bank. Well, guess who has a bank? SoFi. So the OCC's interpretive letters that came out in April were a windfall for us. There's no license for us to go get. We actually have the best license. You'll see a bunch of crypto companies or crypto-centric companies that offer stable coins or that offer buy, sell, and hold apply for OCC licenses, and they'll apply for non-depository insured trust. That will limit what they can do. It will not limit what we can do. We have insured deposits as an OCC licensed bank, so it is a huge advantage. That's a benefit that we have in not only launching the businesses ourselves, but when we go and market our tech platform capabilities to consumer companies and non-financial institutions, we could say to them, this is going to be part of our bank as a service, and it'll be under that regulatory regime, or it'll be part of the bank holding company under the Fed's regime. So the regulatory environment providing that clarity actually gives us a competitive advantage given the licenses that we have.
And just in terms of the amount of time you're speaking to or thinking about, the regulatory apparatus that SoFi deals with on a day-to-day basis. I mean, just the intensity, the oversight, or the focus that the regulators have. Have you noticed a change there?
What I'd say is this: there's nothing that the regulatory examiners or the regulatory framework requires that we wouldn't be doing already. All of the requirements under our bank license and bank holding license are meant to serve one thing: safety and soundness of our institution for our members. And we're aligned with that interest. The amount of time we spend on it is the amount of time it takes to be the best at it. And that's our focus. We can have more exams or less exams. The standard's still the same. We have to have a bank that people trust. We have to have a place when they need to spend their money, they can spend their money. When they need to speak to somebody, they can speak to somebody. When they need a transaction done, that transaction is going to happen. We have to be a household brand name that they trust more than their best friend, their closest relative. And that requires more than what the regulatory environment is. It's a commitment and a culture to that, and we've built it. It's a huge moat that's around us, and that will serve us well over time.
Very good. Well, I think with that, we're just about out of time, but thanks so much for having a conversation with me, and thanks for attending the conference this year.
Thank you.
Can you hear me? Wow. Okay, so a lot of good little drops there. I was pretty excited about some of those announcements. So let's go through some of those topics. Let me just change all my settings around. Make sure you guys are on the front screen now. But yeah, I think that Anthony Noto did very well to highlight their strengths as a business while also saying how they're going after the future. So the two things that he could potentially have said that he's going for in the future is artificial intelligence and crypto. And he made that a big statement to say, hey, not only did we just raise money recently, but we could use that money to buy a AI startup company that would actually benefit from having, 12 million members to actually work with. So we could give them so much data than they could ever, possibly achieve. And we could probably get them for quite cheap. So that was really interesting, potentially buying a small AI name. I always thought it was going to be a small crypto name. He's thinking it's going to be an AI name. Yeah, he said constantly, we are, if I could talk about the future, I think that we are going to be much more aggressive with artificial intelligence. That's very interesting. Crypto, he said, we are literally the best positioned name for cryptocurrency right now. Obviously, we are in deep talks with our stablecoin strategy. He didn't say if it was Ethereum or not, or some other, L2. For example, their international transfers is Bitcoin. So I would have assumed it was immediately Ethereum if it wasn't for them playing around with other L1s. So he did highlight working with other crypto businesses, and the first one that came out of his mouth was Paxos. Okay, that was quite interesting. Paxos obviously does a lot of the stablecoin setups for many, many businesses. Look at PayPal USD, Fiserv. Look at Robinhood's with the Global Dollar Network. All those are through Paxos. So if he is thinking about Paxos, I think it'll probably be Ethereum as well. That's quite interesting for the people who are potentially have other bets with SBET or BMNR. We have a lot to talk about them as well. Tom Lee is just doing crazy Tom Lee things these days. And then he said, we're doing a lot for our buy, sell, and hold crypto trading strategy, including how much PayPal, how much crypto is going to play a big role for the SoFi payment strategy. And they could do as much as offer an incentive because they have a bank, because they have that flexibility, that they could outbid other companies in this space because they just simply do not have the flexibility that SoFi does by having that bank charter. He essentially said crypto came to us. Like, there's a lot of crypto companies that are trying to get bank licenses. And by the way, we took the hardest path to get by far the best licenses. And now the OCC is essentially opening up to allow both the operating company and holding company to operate within their crypto means, which I think is just, really freaking exciting. And so he said, we, in terms of the best licenses to have right now, we already have them. Now it's just about making things work. He said he's the most optimistic he's been in 8 years, which I thought was interesting. He talked about SoFi Relay. I wish he talked about open banking a little bit. Didn't seem to say anything about it. So maybe I'm over exaggerating the concerns there. And then he said credit is looking really good. No changes there. That's great. That's what we want to see. Whenever it comes to credit, we don't like, massive change. He's talking about the underwriting, right? The defaults that are coming in. Nothing's scaring him right now. Everything is still doing exactly what it should be doing. Okay. He even went as far as to say that people with higher customer acquisition costs have higher performing loans, and that people with lower customer acquisition costs, meaning your how much you pay to get them onto your platform, which a lot of fintechs like to hype up how low they can get their customer acquisition costs. He said, well, those customers typically have lower or worse performing loans, which I think just goes to highlight that even the things that people nitpick about SoFi, that they have high customer acquisition costs and all of these things, are very purposeful, and that's why they're able to have such great underwriting and people trust them to have a loan platform business. It's because they know that they'll pay for good quality customers and they're not undercutting. You know, it was a good call. Like I said, most of these times it starts a little slow. There's a lot of people potentially that are listening that do not know what SoFi is, or they're new listeners. So they have to go through the whole, what do you want to do? What do you need to do? What could you do type conversations where he's talking about the entire business, but whatever. I'm here for it. Something about listening to the CEOs of the businesses that you hold big stakes in, I could just listen for a long time. Doesn't matter. Think rate cuts will help us? I do think rate cuts are going to help us. Let's talk about the two things that are happening, however. Okay. First, let's talk about the chances of a rate cut. Let's go ahead and check out the market's belief. I said it probably should be about a 10% chance of 2 cuts, and then boom, 10% chance of 2 cuts. I actually think it's much higher now because of the jobs report. We will talk about that here in a second, but 100% chance of an ease right now, meaning a rate cut in September. So this is in, just a week and a bit that we're going to get a decision whether or not Jerome Powell actually decides to cut rates. And there's a 90% chance that we get a 25 basis point cut and a 10% chance that we get 2 basis points. Now, it's all about, so one, I don't know why that's not switching. It should be automatically switching. Anyway, 2 things that I think of. First up, rate cuts for SoFi through the loan platform business are just materially bullish. Okay. For their existing book, they have, billions and billions, tens of billions of dollars in loans that have a certain high interest rate. Okay. If rates start to get cut, they can end up selling those loans on secondary markets to other loan purchasers and get more because they can't get a risk-free rate or even, a market rate that would be that high. Okay. So as rates come down, that lowers the average coupon rate of new loans and actually makes the old loans that have higher, coupon rates worth even more. However, you also have to factor in prepayment rates and all of these things of, hey, if there is a chance that someone can get a better loan, the same way that they consolidated their credit cards, they could consolidate personal loans. But if it's the difference of 25 basis points, 50 basis points, usually that's not what's going to be what's happening. Okay. So that's why I always say with rate cuts, it's good if SoFi sees slow and gradual rate cuts. A drop off the cliff, some emergency meeting where we have to come in and cut an entire 100 basis points or something like this is actually not good, because then it can scare investors. They end up, or scare borrowers, end up prepaying and go into debt consolidation to lower the costs of their current personal loans or credit cards, something like this. So that stuff can be worrisome. Dookie Pie is in the chat. Dookie Pie hasn't been here in a long time. Great to see you. Just spamming emojis. Yeah, Dookie just discovered emojis. Okay. However, the other side of rate cuts and how good they are is based on the reasoning for those cuts. Now, unfortunately, the reason for lowering these cuts is not the best. Okay. The reason or the reason for not lowering the cuts, but lowering the federal interest rate, is that potentially jobs claims are much worse than we initially expected. And I can show you guys here some reports that ended up coming out, which was just absolutely crazy, where let me find there was a really good graph showing not only the first revisions, but the second revisions. Let me see if I can find this here, because it just goes to show you how, here it is, found it. Okay. So during the time of May and June, whenever those jobs reports came out, they said in June of 2025, there were 147,000 new jobs. Great. And then a revision came in. This was a little bit ago. And then they actually said, oh, actually, sorry, it wasn't 147,000. It was only 14,000. The market freaked out. Okay. Then they did a second revision just very recently on Friday. And they said, oh, sorry, it wasn't 14,000. We actually lost 13,000 jobs. How does that even happen? Okay. And this has been constant across January all the way through June. We have seen an initial reading, a revision lower, and then a final revision bringing down the total amount of expected jobs even lower. If those people who are losing jobs cannot end up finding new jobs, then that means that those people will have to potentially default on their SoFi personal loans, default on their mortgages, right? And then you have a bad credit cycle. Then we have jobs that are leading to real impacts that affect financials. And then it also affects not just SoFi if they don't end up getting jobs, but then future customers that they end up looking into. That pool shrinks if less people have jobs and unemployment rates climb. So that also can be a problem. So, yeah, sorry, the jobs report absolutely sucked and has been sucking, which is making the Fed, they're looking at that primary data and saying, hey, what should we do? A balance between inflation and these job reports. Obviously, if the job reports are sucking this bad, where you're getting the difference of 140,000 positive jobs versus revising downward now becomes actually negative. And then in the most recent report for August, we actually saw we saw a massive loss of full-time jobs, and then the jobs that we did actually gain were part-time jobs, which is obviously not as sticky. So that was a pretty poor report as well, which sucked. I don't know why it's not transitioning. It should just be bringing me back to full screen. I apologize for that. But yeah, so the other thing to highlight as well is that the Federal Reserve, at least for whenever we're talking about credit cycles, and I could probably find a report here. I didn't prep it, however, but in 2007, 2008, as credit was starting to get quite crunched, and we were losing a lot of or a lot of banks were losing a ton of money from people defaulting and sort of throwing their keys on the counter and walking away from those subprime mortgages, that the real crisis that ended up getting started was subprime, meaning obviously worse quality than what you would expect from a borrower at prime. And the interesting part about that is that SoFi doesn't lend to sub or near prime customers. They don't even lend to prime customers. They lend to prime plus, meaning during the 2008 financial crisis, the under part, which was seeing a lot of attention because the coupon rates were really high and you could make a ton of money, was collapsing. But SoFi sits above the line, for which everything was cracking. Like Prime Plus also saw losses as well, but the difference was like a 10x difference, where you were seeing defaults that were happening at 10, 15, 20% on the bottom rungs. If I remember correctly, the reports that ended up coming up from 2007 to 2009 was something like less than 1% for Prime Plus, which is really interesting, right? If you like, SoFi stock in general will still have hard times during a credit cycle. People get worried. Obviously, people will end up selling, but it doesn't necessarily mean that financially there's anything wrong. And that's why I love SoFi, is that they are not a predatory lender. They're not getting into, sketchy ways of making money. Even things like the, what's the name for it? Early wage access. Early wage access or potentially even instant withdrawals is an area of finance that I think is going to get cracked down upon, especially through cryptocurrency. Okay. And there's a ton of companies that I respect: Robinhood, Block, okay, Chime. A lot of these companies are making money from saying, hey, we can send your money to your bank account. It's going to take 3 to 5 days, or we can send it to you right now. It'll appear right now, but we're going to take 0.75% of it. And these companies are making hundreds of millions, billions of dollars doing this. Okay. SoFi doesn't even partake. It's free money on the table. It's free money. And so Anthony Noto said it in the thing. He said, we're not looking for quick, easy home runs. Like, we are looking for long-term partnerships and revenue streams that are going to be there for decades. So that's the quality, the love that I have for this business, is that they are doing the right thing, right? And it's harder to do the right thing. It's very hard. It's hard to not rent a charter like what every fintech is doing. It was much harder to do what SoFi did, which was to go to 50 different states and get individual licenses to operate in all 50, and then eventually go and get, a bank charter that is not, some sort of half-end, just for loans, just holding loans in certain areas. No, it's a full bank charter for every single purpose. So it's not what Block has. It's not what, even companies like Goldman Sachs has. They have essentially a much more mature banking charter. Durable growth. Yes, that's what SoFi has. I was trying to say it, but I'm not. Luis says, appreciate you for bringing Nebius into my site from the deep dive you guys had. It's a great day for you. I should have followed the deep dive because I didn't end up getting into it. Nebius right now is up 40% in the after hours. 40. At one point, it was up over 60+% and was past $100 per share. So today it's 64. That's the number you're seeing here. But tomorrow it will open up at $90. 90. Okay? It's quite interesting. However, I did not partake in this, so congratulations to everyone who did. This is going to be a very durable change. So what ended up happening is that Microsoft said they're tapping them for the next 5 years to help with their cloud growth, and they are going to be essentially, the contract is signed for $17.4 billion. Nebius is not going to make, or at least not at the current trajectory, $17.4 billion of revenue over the next 5 years. So this essentially doubled their business. Very similar to the CoreWeave deal, where they were making like $2 billion a year and then signed OpenAI for $12.4 billion or whatever it was, and more than doubled their revenue. But this just goes to show you the level of demand that artificial intelligence has right now, and that the cloud providers need every bit of help in order to stand up capacity for their customers that are needing artificial intelligence. And just overall buy Dukia membership. Seeing her name in gray upsets me. I can't unfortunately buy I can't make people members, which is unfortunate. But thank you, Steve. Sorry, that said, whenever we're talking about artificial intelligence, though, everyone says it's in a bubble. People keep highlighting that this sort of momentum can just eventually crawl to a stop, and companies can reverse what they're expecting for capital expenditures. And it's people like the Nebius or CoreWeave or NVIDIA shareholders that will be left holding the bag. And I mean, that's true if that's what's going to happen. But at what point does that happen? We're seeing all of the actual model designers, and then the sort of what I would call like, AI L2s, the companies that are building products on top of those models are making, crap tons of money, finding real customers. Millions of businesses, billions of customers are using OpenAI and Gemini and all of these businesses. I use artificial intelligence, or at least try to, more every day. You know? And if you're seeing yourself using less of your old tools and more of artificial intelligence tools, or those artificial intelligence tools are built directly into your bank, into your shopping app, into whatever application that you have. If there's chatbots that are being supported by artificial intelligence, think about how many, or just in that range, how much more there is to grow in artificial intelligence. Right now, I just had a customer support issue with my internet and everything. I called in, a human answered. Why? You don't think that artificial intelligence could have assumed that my problem is one that could be or like that someone else has had before? Of course that's true. Now, today I needed a human to join that call and access my internet or whatever from the back end. So it wasn't just an FAQ problem, but AI will be able to solve those problems as well. They'll be able to go into the back end of my internet and I forget what it was. It was like disconnecting the 6G from an appliance that was too far away. That was I'm not an internet guy. But yeah. Kevin says, add another slice of your finest Sofi to the position, kind sir. Why didn't Microsoft just buy Nebius? I think that they probably didn't buy Nebius because of antitrust concerns now. As they get so freaking big and this market gets so unbelievably large, I think that they do worry about that. I also thought about why NVIDIA never just bought CoreWeave. They bought a small equity stake. They send them every single chip that they possibly get, and the first customer to get them. They have such a strong relationship with CoreWeave. Why not just acquire them? You're just sitting on boatloads of cash. And I don't mean buy them in open markets at the pricing that we're seeing here. I mean like Series B, like pick the company up for $1 billion. Oh, now it's worth 100. Bro, you called Rogers. Thank God you got a human. Oh, dude, I was sitting there for like an hour. I was beside myself. I don't even want to get into it. Why would Microsoft or NVIDIA not just duplicate the companies? Because I think that I just don't think that is something that's very easily done. These companies are extremely specialized with super smart people behind them. You could say that about any business. Why doesn't Apple just duplicate XYZ or whatever? But most times they still can't outcompete those individual businesses. And plus, I mean, it also helps to, I think at that scale, these companies cannot just make any decision that they want. They kind of have to play like very politically smart sometimes. And so they can't just acquire every business. They actually have to, find great customers. And Nebius and CoreWeave are great businesses for both Microsoft and NVIDIA. Breaking news, SoFi buys NVIDIA and AMD in a 3-way merger. I don't think you know what buy means and then say merger in there. You ever take a look at TMDX? No. I know it's more of like a logistics company than a healthcare company, but I still don't care. How would anyone have known about the Microsoft Nebius news before it dropped? Was there a rumor? I don't think so. The stock was going down. If I'm not mistaken, it went down 2% today. So I don't think that it was leaked. I think the stock started running as the news actually came out. We saw it in real time. Okay, let's see here. Let's talk BM&R and Tom Lee. You're so right, Kelly. So first up, we have to, if we're going to talk about BM&R, we have to talk about OCTO. I'm just going to bring up a little company for you guys. There's a little company called 8Co Holdings that, as you can see, today has gone up 3,000%. The reason why it went up 3,000% is that Tom Lee said that he was making a $20 million investment via BM&R's balance sheet into this company, which is a treasury for WorldCoin. Now, WorldCoin is Sam Altman's startup, the whole thing with the scanning the retina. You have a token that is sort of assigned to you. It's like human identification on the blockchain. A lot of people think it's very dystopian. I think it's very dystopian. But yeah, that's what 8Co is doing. Just another treasury of another coin, which is actually a L2 coin, meaning that it still is based on Ethereum and supports the Ethereum network. So the work that they're doing here is still beneficial to Ethereum. But that $20 million that Tom Lee just put in is worth, 30x more. like he really did put $20 million at $1.26 or whatever it was. Like, it was absolutely insane. Maybe even lower. Like, it was incredible how low he ended up making that purchase. And then immediately shot up on excitement that, now it's a $137 million business, which is still not even that crazy. But obviously, if it's a very, very cheap company, then a $20 million, funding is quite large. Welcome to the top. I mean, it could be a top. However, I'm not really sure. Like, a top in what region? We're not in a 0% interest rate environment. We actually have high rates, which means that as we bring rates down, businesses will be able to lend more or borrow more because it'll be at cheaper and cheaper rates. Then you have, sorry, I lost my train of thought. Artificial intelligence and electric vehicles and, better advancements in energy and just every single aspect of what Kathy would call one of her big ideas, all mashed into one and making real advancements. Obviously, I think there are some things like EV tolls and quantum and some of these things that are far out moonshots that I would not count towards the innovations of today. But artificial intelligence is a very real one, and that one's unbelievably huge. And it feels like robots are right around the corner. The advancements there is very exciting. However, maybe not from the videos that we saw from Elon Musk. That was not as exciting. But yeah. We're a few more months before top. I think these comments, Igor, I really appreciate most of your comments in chat. But these types of comments mean zero to me. This is 1000% a guess. And people go, oh, you know what? We're not super euphoric yet. We'll be super euphoric 6 months from now. Based on what? Based on what? And that's not even against Igor. I see these types of comments all the time. If we end up seeing a new report that Microsoft, Meta, Google, or something like this ends up creating a new use case to help businesses lower customer service costs, increase the rate at which they can put out new code, something, lower the cost of content creation, marketing, advertising, anything. And by the way, all of those are being explored exactly at the same time. So everyone even me, I'll put the blanket term artificial intelligence, but that means better targeting, better customer acquisition, faster ways to put out content, monitor emails for support tickets. It's everything. Okay. And as those get better, as SoundHound puts out better, models that allow people to, make voice end up sounding more realistic or understand your voice so then it can respond more efficiently. All of these things go to, real business returns. And unlike the internet era, and what I think was different there is that the actual hardware. So although software was being built, hardware was the bottleneck. Not everyone had a personal PC or a personal computer. Kind of redundant, personal PC. So here, because of the inventions of cloud, and then obviously PCs and mobile, via cloud, we've been able to distribute AI tools directly to mobile and computers immediately, right? And so updates have been much quicker. Distribution, actually, people downloading new apps has been at all-time highs. We have to remember, OpenAI was the fastest app to 100 million users of all time. That's real to me. That feels real. I use it every day. I'm paying a subscription rate to these businesses. And so as NVIDIA ends up making better and better tools, then that actually makes the cost of what I'm doing, of token generation, much cheaper. That the things that I'm doing today with artificial intelligence will become very cheap in the future. Gemini put out a report saying I think they lowered the cost of token generation from, I think it was like 95% they lowered the cost in an 18-month period. Okay? This was a while back, though. That statistic came out like a year and a half ago, so I wonder where it is today. But that's the thing. It's not that we're just endlessly spending more because we can't figure out how to lower the cost. No, we're lowering the cost, but then we're figuring out new ways to use it. Like Gemini ends up putting out a thing. Hey, you know what? You can scan tweets and we'll summarize the tweet for you. Great. Not a lot of tokens, but cool. Hey, we can actually think and reason about this tweet a lot longer and give you real answers. And if there's a math question in there, we'll understand it. If there's some other context, we can scan an image. We can figure out the context of a video that you're watching. That's a lot more tokens. But alongside adding a lot more tokens also brought down the cost of tokens. So it kind of evens out. And then now they're like, okay, well, we'll help you create images. We'll help you create video. We'll help you create video that has audio. Well, if you can create video that has audio, and then you're going to say, okay, well, let's make that, a 10-second video, a 60-second video, a 3-minute video. Okay, well, now, like, you're just going to be making all of that, like, advertisements that you would spend hundreds of thousands of dollars for editors and FX, sorry, not FX, like, what do you call it? Like effects people for video editing. Those people are going to, like, either they're going to need to put out a lot more product or they need to get a pay cut, because there's something online that'll do that in seconds. Let's see. Yeah, this is why I always continue to say, like, keep learning about artificial intelligence and staying on the top of this, just because things are going to change so quick. And if you take your eye off the ball for a minute, you're going to think that things are getting quiet or stale. But that's the complete opposite of what I think is actually happening. And then for the companies that I'm betting on, the NVIDIAs of the world, the actual infrastructure layer right now, Meta said they're going to spend $600 billion through 2028. You know what the market said? Yeah, bullcrap, they don't have the money. That's why they're not spending it now. They're spending it by 2028. Meta's going to make more money on that money. Okay? And then what's so funny is Zuck said, hey, you want to know what, you want to know the interesting part? I was just being conservative about the 600 billion. It's quite possible that we invest even more. I briefed the president that we're planning to invest 600 plus billion through 2028 and a significantly higher number through the end of the decade. I wasn't sure which number he was asking about, so I just shared the lower number through 2028 and clarified with him afterwards. So tell me you don't like Broadcom, AMD, NVIDIA. Wouldn't energy be the bottleneck? Energy is the bottleneck, okay? But this is why I love NVIDIA so much. It's because whenever it comes to total cost of ownership, total output per chip, they're the leading case, right? So whenever you're talking about energy being the bottleneck, let's assume, these companies have more money than they have the ability to actually invest in energy output. They're going to buy the best chips that can output the most amount of tokens for the amount, like if they're capped on the amount of energy that they could actually output, right? So, or that they could actually deliver. I don't know the right verbiage that I should be saying here, but the meaning still holds true. Is that I think that it actually highlights how strong NVIDIA is. Maybe nuclear is the answer for energy. I mean, maybe there's going to be some energy people that are much stronger in that field than me. Blackwell's 25x energy efficient to the next best. I don't know the exact rate, but right now, yeah, the Blackwell GB300s especially are untouched by anything else in the market. So, yeah. How important does a memory chip investment play become in this new world of artificial intelligence? Joey, your guess is as good as mine. I'm not touching any memory names right now, but I could see myself being an investor in like Micron, for example, but I don't currently have an investment. I could also see myself being a big investor in Broadcom lately, and I actually thought about, is there a world in which so for many of you guys that didn't know about the how my portfolio has changed over the last year or so, I had NVIDIA as my biggest position. I forget the exact percentages, but let's say it made up for 30% of my portfolio. And then Tesla was roughly about 20% as my second biggest position. Things were not going so well for Tesla, and I had worried that the future was going to be even worse. So I sold off that 20% and put it into my number one position, making NVIDIA essentially 50%. It wasn't really, it was like 40%. Now it's grown to 50%, but you get the idea. Anyway, I've always said that I'm going to return to the Tesla investment, and I still might. But what could be a very good idea is that I just split that money between either TSM, Broadcom, slight bit of AMD. I cannot get enough semis. It's unbelievable. And people are highlighting, they're going, oh my gosh, but semis are making up for such a large percentage of the S&P 500. I think they're like, over 11% now. It's the highest they've ever been in history. But it's not the committee that's making that happen. It's the semi business that's making that happen. Okay? And from everything that I'm reading, they're still extremely undervalued. Like TSM, for example, is like not like I can debate with you guys whether or not NVIDIA is expensive or not, and I can bring in the margins and the growth rates to prove this, but companies like Broadcom and especially TSM are like cheap, like cheaper than their not just their market peers, but other industries. That is quite interesting. So maybe I break a little piece off into those names. But I'll continue to look. I don't have to rush. See, if I was in cash, I'd feel a much bigger need to rush into these positions. But because I'm holding NVIDIA, like a bunch of people highlighted, they're like, oh, well, SoFi's not your biggest position. You've missed out on all these gains. I'm like, missed out on all those gains. I've been holding NVIDIA during that time. Like, it's not like I'm sitting all in cash and then there's 1% of my portfolio that's growing. No, it's like if things are going right, a lot of my positions should be growing. So I'm still sitting comfortably, looking at other opportunities, but I'm in no rush to sell the best company in the world to buy a potential best company in the world. Or one of the. Riskier to be all in one sector. I mean, I think with semiconductors, you're okay, especially with a company like Broadcom or TSM, where you're actually so diversified in the products that you're actually, designing and making, that it's not quite the same thing. If I were to have just, 50-50 my portfolio into NVIDIA and AMD, I think that's more concerning than 50-50ing it into NVIDIA and Broadcom, for example. Mitch Match, you said, have you given any thoughts into BMNR and the 8Co thing? So we did talk about it. I don't have super strong beliefs. I'm just simply looking at the business. I think the thing that I dislike about it the most is that Dan Ives and someone said, oh my gosh, we have the dream team here. Tom Lee, Dan Ives, and Sam Altman. I'm like, I mean, it's the hypiest one, that's for sure. But the only real business operator that is proven within that group is Sam Altman. And that was, for the most part, very recent. I like Dan Ives and I like Tom Lee so much. Don't get me wrong. It could be awesome. But they are stock pickers, not business operators, and just because I'm out here picking SoFi doesn't mean I could run it. I mean, that's for sure. I would never take the CEO position of SoFi, as much as you guys joke about that. Very different jobs. I'm a loser behind an Excel spreadsheet. That's very different than what Noto's doing, okay? I am picking stocks because I get to bet on the winners. I'm not trying to rule the world here. Obviously, it could go very well in 8Co and all those things, but I just wish it was a great operator, not just another guy who is, going to be marketing. I feel like you already have the marketer. The marketer is secure. That's Tom Lee. But yeah. So that being said, with BMNR, I still think it's mainly a play of what do you think well, it's not much of a what do you think? It's just numerical. What is the net asset value or mark to market of their net asset value? And then look how much Ethereum, cash, and potentially other investments like 8Co that they have, and look at their stock price. And the market is essentially betting that they are going to do worse with that money than, just buying Ethereum yourself if you're keeping it under NAV. I don't think that that's the case. I think that they've been acquiring Ethereum like crazy, and it's been a few months, and they've acquired 1.5 or 1.6% of all Ethereum. It's unbelievable. So I'm a believer. I'm a shareholder. Believer in SBET as well. I believe in Ethereum, not because it's a speculative bet, but because I think of it as a technology that's being used more often. I mean, we just saw SoFi just talk about it. Okay, let's see. BMNR will stake Ethereum that will create revenue? Yes. Okay, let's see. S&P COs are noteworthy. Speaking of which, Robinhood got entered into the S&P 500. I don't even know if we ended up talking about that, but it's just insane that that happened, on Friday or whatever. And then Monday, the stock is up 15%. And then tomorrow, we're going to Las Vegas to, show off what they said. Where is it? New products for active traders. Tomorrow. I'm going to be there. So, got to get on a flight nice and early tomorrow. Going to be going to bed early and make sure that I'm in Las Vegas to see this event and talk with the many employees who have probably just made a fortune from their company entering the S&P 500. So I'm sure the spirits are going to be so freaking high. Hopefully you guys got in to that name. If you didn't, I think that's perfectly fine as well. I miss names that were right in my. I just missed it with Nebius. I miss names that are right in my face. But hopefully you just don't do that all the time. Got in yesterday, like in overnight markets, or you mean like Friday? I own more Sofi than Hood, by the way. Tibby asks, are you going to be there for the keynote? Yeah, I'm going to be there for everything. It's not just the keynote. Like, there's many speakers that they actually end up having there to talk about different products that they're working on, everything like this. I'll be there the whole day. What do you think? Okay, so Victor, we have another show after this at 9:30. I have no clue what they're going to put out. No clue. It's the first time I've been so, so lost. Piyush, I appreciate the dono, but tell me a ticker that you want me to put on, because I'm not going to gamble. I've got a thing against it. I don't want to like gambling. I've never gambled in my life. I never will. But I'll buy SoFi. That's perfectly fine. Thank you, brother. I appreciate that. Amit said you couldn't handle early real well. No, I think the thing is just like, well, yeah, I mean, I guess that's true. It's not that I can't get up early, but then it just means that I got to go to bed early. Like I can't handle not getting 8 hours. That's what it is. So I'm just going to go to bed early tonight and then get my 8 hours. But aside from that, I mean, yeah. Mitt said you sleepwalk naked. You guys act like I don't watch any of the streams. I see what he did not say that. Tanner, Amit said you have an Airbnb quirk. I do. He said he said he's gonna talk about it tonight. But what's so funny is that he asked me, he like texted me, he's like, is it okay if we say that thing? I'm like, bro, I don't. he likes to hype up things so much more. It's nothing. It's absolutely nothing. You guys can hear about it on the next stream because he'll want to talk about it. Wow, 8 hours. Yeah, it's like the normal. You look up how much a human's supposed to sleep. They say 7 to 9. Maddie, speaking of which, why aren't you in Vegas, brother? We're having everyone come out. Chris Patel's coming. Oh, I said Patel. Chris Patel. Is anyone coming, by the way? Busy season. Got you. Is anyone coming to the Vegas trip in this group? Maybe I should bring my pass from last year and just try to confuse some people. Go in, scan it. Okay. Did Dookie Pie fall off the face of the earth? No, she was in this chat. She was here earlier. Her name was like, where was it? She was here. Yeah, she was here. Okay, let's see. Oklo and SMR. I mean, they could be huge names. I don't know the energy space well enough to pick the names that are going to win, but I definitely see those show up very often. So when Vegas and what hotel? I don't like that. I don't like that. Talk to Robinhood. If they give you an invite, accept it. Don't show up without an invite. I'll be there. Awesome. Awesome. I'm so happy to, or so excited to meet some of you guys. This is going to be a lot of fun. If we super chat red or black, will you do that instead of buying? No. No. Keep your money. It's all good. On Hood. Yeah. Yeah, no, I did actually see this, that there is a crazy amount of volume that's flowing through Robinhood right now. We're going to talk about this as well on event contracts. It's insane. This just got updated from Juan again. Week 2, 43 million contracts traded. The U.S. Open is also a big weekend with lots of volumes, with lots of volume. 36.5 million contracts traded, which leads to $365,000 in revenue. This is free money for them. This is connecting APYs that Kalshi offers them, and we're just saying, hey, yep, you can come join if you want to use our platform versus theirs. And obviously, you can see that they are using it. People feel more willing and able to go to, Robinhood's platform than trying to do like Kalshi or Polymarket or one of these ones and send all your money over there. Your money's already at Robinhood. Okay, let's see the community portfolio really quickly. We had a green day. If SBET's green, things are not doing too bad. But we are still red from whenever we started this, July 8th. So, guys, we have 104 names. I think we're good on the new names. This is the Community 100. And SBET, I think our original purchase price was like $37 a share or something like this. It was, just unfortunate timing. But I still do believe in the treasury names. Okay. And where is BMNR? BMNR is doing a lot better than SBET, and we didn't buy it as high, but 43.79. In total, SBET is a 57% loss for this community fund, which is not picked by me, but picked by you guys through donations, as you saw from Piyush giving $10, or Piyush giving $10 for SoFi, and Kevin giving $10 for SoFi. So we're going to continue to expand the SoFi allocation, which is actually up 20% for us. And I've got zero problems buying another share of SoFi, or $20 worth of a share. I can't believe $20 doesn't even get me a share anymore. Josh Allen MVP for SoFi. Yeah, we'll see. I'll have to see how it actually ends up playing out. But ladies and gentlemen, I have an hour and 15 minutes until my next show. I might even try to do a sauna between that time. I'm going to try that. So I'm going to go, and then you're going to see a red Tanner whenever I get back in an hour and 15, which will be live once again with Amit and Roy, talking about Robinhood, talking about SoFi, talking about the many names, probably Nebius, and hear some of their thoughts as well. Thank you all so much for watching. Really do appreciate your time. Make sure you subscribe. Bye for now.